All right. Hello, everyone, and thank you for continuing to join us here throughout the Lytham Partners 2024 Investor Select Conference. My name is Robert Blum, Managing Partner of Lytham Partners. I am pleased to be joined by Rob Brown. Rob is a Senior Research Analyst and a founding partner from Lake Street Capital Markets, covering sort of industrial growth and the energy technology space. Rob, thank you so much for joining us today for this analyst roundtable.
Thanks for having me, Robert.
Great. We got about 15 minutes, so I just want to sort of jump right into it here. Talk through maybe some of the key macro themes that you're seeing within sort of that broader energy transition and sort of clean tech space right now.
Yeah, I think there's several themes going on, and I think probably the biggest theme is really the implementation of some of the Inflation Reduction Act type subsidies that happened a couple of years ago now, and they are starting to flow into some of the companies' revenue streams and order books. I think hydrogen hubs kind of come into things here this year and start this year, and then some of the EV infrastructure activity is also coming about. And I do think that's a theme that's being driven by some of the challenges in the EV market that lack of infrastructure has brought. So I think EV infrastructure is going to be a big theme this year in terms of activity, and then also the greening of the grid and grid stability are big areas. That's not new this year, but certainly continuing as a playthrough on what's been happening in the marketplace, and I do think that's going to really continue this year. Then I think a theme that has gotten some attention, but is really going to continue here is nuclear. The need for more nuclear, really the realization that the need to meet the clean or carbon emission requirements and of the electric grid. The only way to meet that and the growth of demand is really with nuclear. And I think there's been a mixed view on that, but the realization is happening, and there's frankly not that many public companies in this space, and there's long term. Takes a long time to get a nuclear plant built, so there's a long duration as that comes in. But I do think there's a theme of the realization that needs to happen, and there's a significant amount of government support coming and in the discussions, and actually has been approved already. So that's another big theme. And then I think the last sort of theme that's going to be a big attention this year is really how the election impacts some of the demand drivers here, and obviously the current administration has a view and a perspective, and I think the Trump administration would change some of those things. So I think that's going to be something to watch as well.
Yeah, let's maybe on that last point there is there a significant step change that you think could occur if a Trump administration comes in with this universe, or are some of these things far enough in place to where there's not going to be as much of an impact?
Yeah, I think the existing spending obviously wouldn't change, and it's far enough along. But I think some of the new directional things around some of the transition situations, like LNG, for example, would be probably more favorable than some of the Biden administration talk about it. And I do think some of the pressure off of the clean tech changes probably comes off with the Trump administration. But California is obviously a big driver in the government action here, and so that would not change.
Gotcha. Okay, let's maybe dive in a little bit further into a couple of these themes, and maybe within the context of investor sentiment, right? Is there increased investor sentiment in a couple of those themes, nuclear, sort of the heavy duty transportation market? What are you seeing today versus maybe a couple of years ago, and maybe election impacts some of these trends as well, but just the overall investor sentiment into your universe there?
Yeah, I think investor sentiment is probably, I would say it's mixed. There was a significantly positive investor sentiment a couple of years ago when some of the IRA stuff around hydrogen and clean vehicles and clean electricity kind of came about. Some of the fuel cell companies had pretty significant valuations, and that has turned around. I think some of the EV SPAC-related EV company difficulties have changed better investor sentiment, and a negative way. But I do think where you're seeing positive sentiment are those companies where the technologies are maybe more mature, the cash burn is less, and the orders are starting to flow through. So I do think I would call it mixed, and it would make sense that the cash burn levels would be out of favor in general. And I do think those where they show some near-term traction and activity is much more favorable. So I do think some of the themes around hydrogen infrastructure coming into play, some of the EV kind of solutions to some of the EV infrastructure problems, I think those are probably more in favor than some of the longer term companies.
You know, when you look at your cover, you cover how many companies? 15?
18.
18 companies. So if you look at the company universe that you're covering there, what percent are sort of broken down into those that are profitable, cash flow positive, whatever sort of general terminology we want to utilize, versus those that that are still making investments, burning cash, and what has been this? Has there been a significant change in sentiment of investors looking at companies that are profitable versus those that are not?
Yeah, I think about 2/3 of my coverage would be profitable and cash flow positive certainly before capex. But I do think the sentiment has changed. I think there was a lot of positive sentiment around hydrogen fuel cells with some of the activity that's probably the biggest change in my universe in terms of sentiment. I think what changes that back to the positive side is a number of the in the hydrogen fuel cell market, the activity is actually improved from a customer interest standpoint, but the interest from an investor sentiment standpoint is actually negative because of the cash burn. But what you've seen is a significant amount. The California clean truck rules that are coming in are really driving transit agencies to adopt hydrogen fuel cells. I think some of the challenges with EV, especially on the heavy duty side, in terms of cost of getting infrastructure and difficulty to get infrastructure, and then the range issues that those vehicles have, is really pushed toward zero emission vehicles sort of have to be fuel cells at that point. I think there's some more realization of that. So the demand environment is actually getting better. I do think it's a couple of years before you really see the ramp for Ballard, for example, which I covered, and others. But I think that is fundamentally getting better, but the investor sentiment is low until they really see it in orders and results.
Are you seeing your universe of companies, maybe especially those that may be 1/3 that isn't profitable? Have they made adjustments, restructurings, whatever? Maybe that's too aggressive of a term, but are they making adjustments in their business plan given sort of interest rates, capital raise, where things are at to get towards profitability? Maybe foregoing some growth initiatives that they had looked to implement 2-3 years ago, but given today's market environment, given the investor sentiment that you're talking about, they are looking to achieve profitability quicker.
Yeah, I think there's been some tightening of spending activity and investments. I would say, in the ones that I cover in particular, they don't, they tend to have more equity financing, and some of them have balance sheets that can support it. So they haven't really curtailed spending significantly. I think this opportunity in the market is there. I think the demand environment is improving, so I think the spending activity has really not been curtailed in those situations where they have the balance sheets.
Yep. When you're looking at putting together your valuations on companies, has there been sort of a step change in valuation methodology, we'll call it, that you've applied to the universe, whether it be limited outlook, rising interest rates? How do you look at valuation today versus, again, maybe a couple of years ago?
Yeah, I would say that the valuations have probably come down to the lower end of the range on most of the companies. For the sort of longer term stories, I look at a DCF valuation, and there's obviously an implied interest expense or an interest rate element that would lower the valuations in that scenario. But I think generally the willingness to give kind of premium multiples on the growth aspects has pushed valuations more toward the low end of the range. I think where you've seen high valuation ranges are those with strong order activity and a pretty favorable current macro environment. And I think where you've seen that in particular is around some of the sort of traditional pollution control type companies where they're getting systems as new factories are put in. You need to put in pollution control systems, and those order activities are quite strong in some of the more traditional companies. So I think that those valuations have gotten toward the top end, but I think but for the most part they're trending toward the lower end of the historical ranges.
Maybe in the last couple of minutes here, you've mentioned the impacts from regulatory Inflation Reduction Act, some of the initiatives in California. Outside of just sort of general consumer demand, what sort of external factors and election maybe being put aside for the moment, but what other external factors you think are driving the demand, if you will, in your universe of companies that are out there?
Yeah, in my world, there's sort of kind of three pillars. One is the effort to reduce, or really around reduce carbon emissions of some sort, and that's heavily driven by government activity. I would say that's the biggest pillar. I think energy security has been a big driver and will continue to be, and that really drives, I would say, multiple sources of energy or homegrown energy, depending on the country. But essentially, energy security sort of woke up around the Russia-Ukraine invasion, and it's continued, and I think that will continue. And then I think the other theme is just sort of the shifting a bit to the practical nature, in the sense that to meet some of these long-term goals, you're going to need to rely on some technologies like gas turbine power generation, nuclear power generation, and that solar and wind power are growing significantly, but also have their limits.
So maybe just you can name names or feel free not to, but the number one sort of theme that you're looking at here for 2024, industry, macro, some of these issues related to energy security, carbon emission, whatever it might be. What is sort of your number one theme here heading into 2024?
Yeah, I mean, I think one of the number one kind of themes and activity this year is really going to be nuclear becoming much, many of the plans and ideas coming into, they take a long time to implement, but I think, starting the planning and implementation in a more tangible way. I think I cover Centrus Energy. They do nuclear enrichment. They are really they've built a demonstration factory for what's called HALEU, which is a high assay enriched uranium, which is sort of the next generation fuel. And that is, I think, one that's at a turning point here where many of these ideas really need to get started to hit some of these long-term goals. And really now is between 6 and 10 years away. You really have to start a lot of that activity today. And one of the, so I do think there's going to be a fair amount of action on nuclear this year. And I do think this is an interesting year for that.
Excellent. Well, I am greatly appreciative of your time and your insights here today. I found it useful and insightful. I hope everyone on the webcast here did as well. I guess, Rob, I don't know if you want to sort of share any information as it relates to how to get a hold of you to obtain insights into your research. You care to share any contact information or otherwise?
Yeah, I'm certainly happy to respond to emails. My email is rbrown@lakestreetcm.com. That would be a perfect way to contact me.
Fantastic. Well, thanks so much, Rob. Greatly appreciate it. We got a couple more webcasts coming up here on the conference today, so I hope everyone continues to follow along. Rob, thanks again for your time. Take care.
Okay. Thanks again, Robert. Bye.